Welcome to our Mellerix Edge channel. Think about the biggest number you can imagine in corporate investing. Got it? Now multiply it. On June 29, 2026, the technology world was hit with an absolute bombshell. South Korea's two biggest tech juggernauts, Samsung Group and SK Group, announced a combined jaw-dropping 10-year investment plan totaling 2 quadrillion Korean won. In US dollars, that is a staggering $1.3 trillion. To put that into perspective, this single decade-long plan is nearly double South Korea's entire annual government budget. It's an investment wave so massive it could reshape global tech geography forever. But here's the twist that has everyone talking. Right after this history-making announcement at a presidential briefing hosted by the South Korean government, the stock market didn't skyrocket. It did the exact opposite. Samsung Electronics shares plunged over 5%. SK Hynix fell over 3%. And the broader South Korean Kospi index tumbled into a sea of red. Why would the ultimate display of AI and semiconductor dominance trigger absolute panic on Wall Street and the Korea Exchange? Is South Korea brilliantly securing the future of the artificial intelligence revolution, or are we watching the single largest corporate tech bubble in human history begin to pop? Today we are breaking down exactly what this $1.3 trillion megaplan entails, where that mountain of cash is actually going, and the terrifying economic realities that have investors running for the hills. Let's look at the load-bearing details of this plan, because $1 trillion isn't just dropped into a single bank account. This is a massive, highly coordinated blueprint spread across South Korea's geography over the next 10 years. The core of the initiative is being called a push for 3 mega-projects. Historically, South Korea's tech wealth and infrastructure have been heavily crammed into the Seoul metropolitan area. The government is trying to change that by forcing a massive regional expansion into areas like the southwestern Honam region. First, let's talk about Samsung. They are planning a standalone capital expenditure of roughly 1,000 trillion won. Much of this cash is earmarked to build brand new front-end semiconductor fabrication plants, or fabs. Originally, they were just going to build packaging plants in the Honam area, but they shifted course to build entire semiconductor fabs that handle the full production process. Then we have the SK Group, the parent company of SK Hynix. They match Samsung with their own 1,000 trillion won package. SK is focusing heavily on expanding semiconductor capacity and building gigawatt-level AI data centers. Building a single modern semiconductor fab is a logistical nightmare. It costs at least $40 to $50 billion minimum. By committing to build massive new front-end fabs in the southwest, plus advanced packaging belts in the Chungcheong region, South Korea is trying to build an unassailable ecosystem. The government is backing this to the absolute hilt, offering rapid permit approvals and massive state support for power supply networks. They know that to beat competitors like China, they need ultra-high-cost entry barriers built incredibly fast. But why now? Why double down on hardware at a scale never seen before in human history? The answer lies in a hidden bottleneck that most casual AI users never think about. When you ask a chatbot a question or when an enterprise model trains on terabytes of data, it doesn't just require a fast processor like an NVIDIA chip. It requires an incredibly massive, ultra-fast pipeline of specialized memory to feed that processor. This is called high bandwidth memory or HBM. Without HBM, the world's most powerful AI GPUs sit idle, waiting for data to arrive. Memory is the true physical limit of AI scaling. And guess who controls the global HBM market? Samsung and SK Hynix. They are the absolute gatekeepers of AI memory. SK Hynix is currently the primary supplier of advanced HBM to NVIDIA. In fact, just a week before this mega announcement, SK Hynix actually overtook Samsung to become South Korea's most valuable listed company, driven entirely by the AI boom and its dominance in HBM chips. Right now, tech hyperscalers like Microsoft, Amazon, Google, and Meta are locked in an infrastructure arms race, spending hundreds of billions of dollars a year on data centers. By dropping $1.3 trillion over the next decade, South Korea is betting everything on the idea that this memory scarcity is a permanent fixture of the future economy. They want to ensure that no matter who wins the AI software race, everyone must buy the physical dirt and silicon from South Korea to run it. So, if this plan secures the ultimate backbone of the future, why did the markets completely freak out? Why did the Kospi plunge, wiping out nearly $350 billion from the South Korean market in just a week? And why did regulators actually have to scrap a planned launch of new weekly options contracts to stop wild speculative trading? It comes down to a terrifying two-word phrase floating around Wall Street right now: AI fatigue. Investors are starting to ask the hard question. When do these multi-billion-dollar investments actually turn a profit? Financial institutions are releasing chilling warnings. They are explicitly stating that the prolonged corporate investment boom in the AI race could face a massive bubble-bursting risk. If the actual economic returns of AI applications fall short of expectations, it could trigger a sudden, violent pullback in financing. A capital expenditure boom could instantly invert into a prolonged investment bust. Think about it from an investor's perspective. Samsung and SK Hynix are already spending tens of billions of dollars in capital expenditures annually. Now layer a $1.3 trillion 10-year commitment on top of that. If AI demand starts to level off even a little bit over the next 3 to 5 years, these companies will be left holding astronomical amounts of debt and overcapacity. Semiconductor manufacturing relies on high capacity utilization to turn a profit. A multi-billion-dollar fab running at 50% capacity because tech companies stop buying as many AI chips is a fast track to corporate ruin. The market is looking at this $1.3 trillion figure not as a sign of strength, but as a terrifying fixed cost that will severely pressure near-term profitability and squeeze margins for years to come. There is also a massive execution risk that the headline numbers completely hide. For tech analysts and supply chain managers, a massive number like 1.3 trillion is just a promise until the actual ground is broken. The reality of the chip industry is that announced fab investments take a long time to materialize. It takes roughly 3 to 5 years to take a semiconductor facility from an initial blueprint to actual commercial wafer production. To see if this trillion-dollar plan is real, we can't just look at today's announcements. We have to track the operational signals over the next 12 to 18 months. We need to watch for formal corporate capex filings, local site permits in Honam and Changchun, and critically, equipment orders from major monopoly suppliers in Europe. Furthermore, industry experts have raised heavy concerns about regional disruption. South Korea's entire semiconductor ecosystem, the talent, the suppliers, the universities, has traditionally been concentrated tightly around Seoul. Trying to forcefully build brand new massive megaclusters hundreds of miles away to satisfy regional political goals could create friction, making finding the right talent incredibly difficult. Ultimately, South Korea is making a historic high-stakes gamble. They are betting that the physical infrastructure of artificial intelligence is the most valuable real estate of the 21st century. If they are right, Samsung and SK Hynix will essentially own the digital pipelines of the human race for the next 50 years. If they are wrong and AI infrastructure demand cools down, the sheer weight of this $1.3 trillion capital expenditure could fracture the South Korean economy. It is the ultimate game of tech poker, and Seoul just pushed all their chips to the middle of the table. What do you think? Is this $1.3 trillion plan a visionary move to secure the future, or are we watching the peak of an AI bubble that's about to burst? Let me know your thoughts in the comments below. Do subscribe for this channel. This more useful showing in this channel. Stay tuned for